by the joint fiscal committees of the legislature regarding the governor's proposed budget for the fiscal years 2016-2017. The hearings are conducted pursuant to Article 7, Section 3 of the Constitution, Article 2, Section 31 and 32A of the legislative law. Today, the Assembly Ways and Means Committee and the Senate Finance Committee will hear testimony concerning budget proposal for taxes. I've been joined by Assemblyman Oaks and Assemblywoman Galliff, and I will now ask Senator Young to introduce her members.
Thank you and good morning, and thank you, Chairman. We've been joined on the Senate side with Senator Liz Kruger, who is ranking member on the Senate Finance Committee, also Senator John Bonisic, Senator Marty Golden, and Senator Gustavo Rivera.
Good morning and welcome. The New York State Department of Taxation and Finance, Jerry Boone, Commissioner. Good morning, Commissioner.
Good morning, Mr. Chairman Farrell, and good morning, Chairwoman Young, and to all the members of the Senate Finance and Ways and Means Committee. As the Chairman said, my name is Jerry Boone. I am the Commissioner of Tax and Finance. It is my pleasure to appear before you today to discuss Governor Cuomo's 2017 executive budget, and more specifically, how the budget relates to the work that we do at the Tax Department. Governor Cuomo's executive budget continues the progress we have made over the past 5 years to change the direction of the state. Together, we have produced 5 consecutive on-time budgets, limiting growth in state spending to an average of just 1.4%, the lowest rate of growth in decades. Our fiscal constraint has provided us with the means to provide much-needed tax relief. Over the past 5 years, we have made historic progress in reducing tax burdens for all New Yorkers. We have tackled our state's most burdensome tax, the property tax. We have capped, frozen, and provided direct relief through the enactment of a property tax cap, freezing the growth of property taxes, and in 2016, providing direct property tax reductions through a new property tax relief credit. These programs are estimated to save the average property taxpayer $2,800 by 2017. We have enacted the lowest middle-class tax rates in 60 years, eliminated the MTA payroll tax for over 700,000 small businesses, eliminated the corporate tax for manufacturers, provided tax-free areas for small businesses under the Startup New York program, and undertaken the most important reform of the corporate income tax in 70 years. Governor Cuomo's proposed budget would add to these accomplishments, providing an additional $600 million in direct tax relief. Small businesses represent 43% of all private sector jobs in New York. To enhance the competitiveness of this sector, we have already taken actions that will save small businesses $3.8 billion over the next 5 years. The executive budget builds on this record with initiatives that will provide $1.5 billion in additional tax relief to 1 million small businesses over 5 years, including lowering the corporate income tax rate, increasing the income exclusion for farmers and for sole proprietors, and making the income exclusion available to small businesses structured in other ways. Recognizing the additional costs borne by commuters, businesses, and farmers who rely on the New York State Thruway, the governor is proposing a tax credit that would relieve the burden of Thruway tolls by 50% and fully offset the cost to farmers. Together, our efforts to promote New York's burgeoning craft beverage industry have been enormously successful. The number of farm wineries is up 60%, and the number of craft breweries is up over 233%. The budget includes additional proposals that should save the craft beverage industry $3 million annually. Before I conclude, I wanted to briefly discuss the operations side of the budget. The Tax Department has been recognized as a leader in leveraging technology and data analytics to drive efficiencies, improve services to taxpayers, and to protect state and local revenue. Taxpayers now expect to be able to conduct business with us online. Over 2.7 million taxpayers, including 1 million businesses, have opened online services accounts that offer over 80 separate services. For the most recent processing year, over 92% of all personal income tax returns were e-filed, and e-filing is becoming the standard in the other major taxes as well. These efficiencies allow us to process over 26 million returns and collect over $100 billion a year in revenue with a reduced workforce. We're mindful, though, of the need to remain vigilant. The tax department has made major investments in data analytics and cybersecurity, placing us at the forefront of fraud detection and tax administration worldwide. In the last year alone, our systems identified some 291,000 suspect refund claims, saving the state and taxpayers over $500 million. That is, before $500 million went out the door. While many other states will be delaying refunds this year in an effort to combat identity theft, New York uses sophisticated fraud prevention systems that will allow us to process refunds without such delays. However, we cannot simply rest on our laurels, which is why this budget continues our investments in cutting-edge technology solutions. Again, I want to thank all of you for allowing me to appear before you today to discuss the governor's important initiatives, and I'm happy to answer any questions that you might have.
Thank you very much. We've been joined by Assemblyman McDonald and Assemblyman Braunstein to question Assemblywoman Gelliff.
Oh, thank you very much. I have two questions for you. One of which is on the operational side. We are, I guess people throughout the state of New York are experiencing a check coming to their door through the property tax freeze check. I just wondered operationally when that is going to be concluded. I know not everybody has gotten the check. Do you have a goal as to when we can find that that's happened?
Okay, happy to respond to that. Where we are in the process is that we have issued over 1 million tax credit checks, and we expect to conclude the process by the end of this month, February.
Okay, thank you. And secondly, there had been operationally attributed to your department the issue of BOCES and looking at capital costs. I think it was an oversight when we developed the property tax cap and forgot about the capital activities that were occurring at BOCES but not in the individual schools. And so our school districts are finding that BOCES capital, which they have to pay for, is outside, or it's attributable to their tax cap. And I believe your department, as when you weren't here then, but we passed legislation in June well, I guess we asked you to, but we must have a conclusion on this so that you're supposed to put together a parameter of how our school districts are supposed to handle this. And this is really important to get done before the schools have a budget out for the public to vote on, and important to the capital costs for BOCES.
Yes, we are reviewing the impacts of potential changes on municipalities, school districts, and most importantly, taxpayers. That's where we are. We're in that review process.
Right. I don't think that really answers the question, but maybe you can get back to me with specifics, because I think we directed you to put together a policy that would allow our school districts to include the capital costs of BOCES, exclude the cost of capital costs for BOCES in their tax cap, and that's really important. Unless you're saying what we passed last year, or your department concludes that what we passed last year we didn't mean to pass. So I think we have to have something before us in the next few weeks to help our school districts who are going out for a vote and really tight on the tax cap this year. We thought we corrected the problem, so we just want to be sure it is corrected. That's all.
Okay, thank you.
Senator?
Thank you, Assemblyman. Our first speaker, and by the way, welcome, Commissioner Boone. It's great to have you here today, and especially to discuss these matters that are so incredibly important to all of the people of New York State. We as legislators hear about taxes and the tax burden and so on every single day, so it's great to have this dialogue this morning. I'd like to introduce my colleague, Senator John Bonasek, who has some questions.
Commissioner Boone, good morning.
Morning.
You and I had a brief discussion before we started this hearing. My question is, and this is, I don't think you can answer this question today. It may require a little research. But Part Z of the Revenue Article 7 bill proposes the elimination of all local sales tax on aviation fuel. Now, I have several airports in my Senate district, and we have Stewart Airport in Orange County. It's my understanding that this cost estimate that's going to be lost will be about $4 million. Do we have a breakdown as to how much this will hit each county in our state? And was any consideration given to holding the counties harmless for this loss of revenue?
With regard to the specifics, breakdowns, yes, I would have to get back to you on that.
Yes,
but
I understand that.
I'm aware of the general issue. The general issue is that the Federal Aviation Administration, part of the U.S. Department of Transportation, has a requirement that taxes on general aviation fuel, and that excludes a lot of other fuels that are used for aviation purposes, but that those taxes be dedicated for airport infrastructure improvements. And we have some reckoning to do with respect to this provision now being enforced. It goes back, I believe, to the late 1980s, 1987, thereabout. And so to the extent that those taxes are being collected, they are to be dedicated for infrastructure improvements. And that, so there are conditions on federal grants that makes this necessary to correct the situation. So there is legislation proposed to do that, to eliminate that tax. However, with regard to how it breaks out in terms of economic impact on various counties, we'd have to get back to you on that.
All right. Thank you, Commissioner.
Thank you.
Thank you.
Assemblyman Oaks?
Yes, Commissioner. Good to see you this morning. I just have some questions related to, I know that there's a proposed tax reduction for small businesses in the governor's proposal. Do we have a number of businesses that are going to be impacted by that?
Well, we know that this tax cut in total of $300 million will save more than 1 million small businesses, $1.5 billion over 5 years. So we have that information.
And do we know how many of them are businesses that are filing under their own personal income tax versus of those over 1 million or using corporate franchise tax?
I do not have that breakdown in my head, but we can work on providing that to you. As you recognize, Assemblyman, under the various structures that are available, whether it's LLC or partnerships or S corporations, there are opportunities for that income to be recognized on individual tax returns. So
is that clear to the department when they get it, that is, you're asking for that, you know, to be treated in that way?
Yes, I mean it would be identified in the various forms that you would file.
Okay.
income that's attributable to those arrangements.
When, in your remarks, you mentioned that you processed 26 million returns. So I know we have fewer than 20 million people, so do we have a breakdown of how those returns are, individuals and other types of returns?
We do, broadly speaking, about 11 million of the 26 million would be attributable to individual personal income tax returns. And I thought where you were going was to ask me how can we process 26 million returns with the number of employees that we have.
That's fair, I'll ask that.
Thank you. It gives me an opportunity to commend my fine staff. I have a highly engaged, committed staff, so it's the marriage of talent and technology that enables us to process that volume as quickly and as seamlessly as we do it.
Your remarks also on protecting tax filers in New York. After having an experience with the federal government personally, I appreciate any systems that you have because it is a clear issue and it's a matter of obviously fraud and loss of revenues to the state. Assemblywoman Galiff mentioned about the rebate checks. You said you've sent out about 1 million. How many more, you said you want to be done by the end of this month. How many more are there to come yet?
Well, we're over slightly over 1 million, and we certainly have a light number to go. But we are sufficiently queued up, and you know, keep in mind what was different this year was that we had the requirement that the municipalities and other local governmental entities provide their information with regard to the freeze. And that's, you know, some over 4,000, some 4,100 plus jurisdictions when you factor in the towns and the villages, the counties, the cities, the fire districts, and other various special districts. And we started early in engaging those districts because we knew it would be a fairly mammoth challenge. And we had good cooperation, but nonetheless, when you have over 4,100 different jurisdictions with all that different data set, and understand we're wired to be very pristine about data. So as we should be, as the tax collector, revenue collector for New York State. So we have brought you know, great scrutiny and interactive communication with those districts to assure to our best ability that the data is accurate, and that's what has taken the amount of time that has transpired.
Thank you, Commissioner. I'll come back a little later.
Thank you, Senator.
Next, we'll have Senator Krueger.
Good morning, Commissioner.
Good morning, Senator.
So actually, the lack of people here means I'm going to take multiple rounds with whoever's left. So
The clock is ticking, though.
right, but
As long as we're this way, we can give up and just redo this, recycle.
that's right. Thank you, Denny. I appreciate that.
Based on the crowd here.
So several years ago, I think to the end of 2013, there was the release of reports by the Governor's Tax Commission making a series of recommended changes in the tax code of New York State. I don't really see any of those changes per se in the governor's proposal this year. Is there an ongoing process where your department is actually following up on any of the recommendations from those reports?
Yes, during my first 7 months in the role, I've sought to become fluent with the various proposals and engage with the various stakeholders, from businesses to practitioners to academics and citizens, with regard to other tax areas that were addressed in the report, in the commission reports that you referred to. As you know, we had a major success in terms of corporate tax reform as a result of really collaboration among all the different parties. Certainly the business corporate community, the tax department, other interested parties, this body, and that's what made it work, quite frankly, was that collaborative effort. As you know, anytime we seek to address reforms with taxes, it calls into play a lot of issues. Our tax system has become attenuated in many ways as we have nuanced it over time. So any reform of that arises or raises a lot of questions in various affected stakeholders' minds. So it is an arduous process to work through that, but I think corporate tax reform demonstrates the best way to do that is through interactive engagement of the regulated industry. So that's something that we are looking at.
So one of the largest business tax credits in our tax code is the investment tax credit, ITC, with approximately $1.3 billion of unused carried forward credits. And one of the recommendations in the report was to actually allow ITC credits only for job creation, as opposed to the eligibility companies take now. Have you looked into that any further than the report recommendation?
Well, again, it's all within, active consideration by our policy department. But with regard to tax credits, if I'm understanding the thrust of your question, our role really is to administer those. I mean, we're not the substantive body, if you will, that provides the programmatic application of the credits. We certainly work with those entities, but our job is to actually provide the administration of the credit as it is, as they are provided for.
But you do evaluations of, I guess, the amount of the tax credits that are drawn down, right? That's part of your mandate.
Yes.
And in these reports, there was a recommendation to actually have you better evaluate the effectiveness of these tax credits. So if I'm hearing you right, you don't think it's your department's mandate to evaluate the effectiveness or effectiveness of the credit, simply the dollar number that's being drawn down on a credit?
No, let me try and be more precise. It really depends on the credit. So there are different considerations relative to different credits in terms of what the tax department role is. So I don't want to be categorical in my response. I'd have to talk about the particular credit that is of concern.
So after this hearing, we're going to have the economic development hearing, and people will have questions about the various economic development programs. Most of them have some kind of tax credit or exemption attached to them. And I've already had this conversation with ESDC, where I say, how do you evaluate really how much is being drawn down and whether they've met the standards? And they always say, well, it's a catch-22 because they file their taxes and the tax department is the only one who would know how much they're specifically drawing down in a tax credit or exemption. But my question is, do you actually evaluate or audit in some way these programs to see whether the companies that are drawing down these credits and exemptions that may have been categorized under our economic development programs, that they're meeting the standards? Do you have a subdivision of your audit department that evaluates that?
Well, Senator, again, it's going to depend on the credit, the extent of our substantive assessment of compliance. But we're looking to see, in concert with the administering programmatic agency, whether the claimant has met the criteria for that particular credit, and that largely would be the judgment of the substantive agency, the programmatic agency that has responsibility. The other challenge in terms of traceback, if you will, it depends on the formation of the taxpayer, the filer. I mean, is this a pass-through entity, or is it a direct tax entity that's involved? So it gets a little bit complicated to actually know, to make the attribution, if you will, around the claimant, if you will, to trace that back with any, or to, I guess, provide any precision around that. But if you have concerns about, certain credits, we'll be happy to take a look.
The governor is changing the STAR program from a rebate check to deductions that individuals will take off of their taxes. Would you explain from your perspective how that will impact the program and how it impacts your agency's role in this program?
Sure. Well, if I, again, make sure I understand your question that you're making reference to, I think what you're asking me is, referring to is the conversion of STAR as it currently applied to an income credit, right? And this is a gradual transition. Let me make that clear, because there's been some concern about impact, if you will, on the program. The thought process is to shift it from being addressed through reimbursement, if you will, to the school district, to have the individual homeowner receive that same benefit. There's no diminution of benefit through their income tax, personal income tax return, by claiming a credit. So there's a timing shift, but the value of the benefit, the credit, is not diminished in any way, and it only happens upon transfer of property, if you will. So if someone buys a home or sells a home, and upon that transfer, then the new owner, if you will be subject to availing themselves of the income tax credit process. So for most homeowners, there's no change.
So what is your agency's estimate of how many years it will take for this transition to be complete?
I don't have something we'd have to look at if you'd like to really try and assess or gain an understanding there. We do know that in terms of sales of property, if you will, or transfer of property, residential property, we're talking in the neighborhood of the whole universe, probably 5%. So it's a long, gradual process. Now, a homeowner could opt to move to this arrangement, voluntarily, but in terms of it being mandatory. And the idea here is to, over time, alleviate the burden, if you will, and on the local government, in part, from having to do this validation.
My first clock is done, so I'm going to give it back to the chairs. Thank you. I'll be back.
Thank you very much, Senator. Assemblyman McDonald.
Thank you, Mr. Chair, and good morning, Commissioner. Now I'm going to actually probably pick up where Senator Krueger left off on this change with the STAR rebate to the personal income tax, because I'm not that smart, but I just don't get it. And I look at it simply through constituents' eyes. The reality is, we have a tax problem in the state of New York. I don't think anyone disagrees with that. I like your expression that we've tackled, through some of the efforts over the past couple of years, the tax burden. But tackle means, you'd make your tackle, you get back up, you do another play. In other words, the game continues. We still have a long way to go. And it's hard to get the public perception to change on if we really are making any progress. I philosophically have a problem with the whole tax freeze and the rebate checks Because my constituents, they look at their 2014 bill, and they look at their 2015 bill. If there's any increase, their taxes went up. In their minds, their taxes went up, regardless of the fact that the check eventually makes its way back. So I question that philosophy altogether, but I'm trying to figure out if there's any real benefit to anybody to move from the STAR tax rebate, where they pay a lower amount earlier, or they wait for their personal income tax, and maybe they'll see a difference. How do we educate the public? Because quite frankly, in a court of public perception, I don't think we're going to win on this discussion. And I don't see any, is there a financial benefit to the state that I'm missing? What is the goal? I guess is my question.